Gabe, officially welcome to the Wealth Juice podcast. I had the pleasure of being on your guys' show, Deal Junkies, a couple weeks ago, and that was really exciting. It was a crowded room, but now we get some one-on-one time. So I really appreciate you taking the time, and looking forward to having a great convo today.
Yeah, me too. I'm excited. Thanks for having me, Corey.
You got it, man. So let's. What I like to do in a lot of the starting of the podcast episodes is, a lot of people come here to learn about wealth building and real estate and entrepreneurship and stuff, but I really like to get to know people as the person, like who you are. So like before, being a managing partner and having 200 million plus in real estate and all the cool stuff that people do want to hear about, tell me a little bit about yourself, where you're from, and just like your upbringing. And I'd like to learn about the pre-real estate, Gabe.
Sure. Yeah. No, if anybody's listened to my story before, it'll sound like a broken record, but I came born in California to a car guy. My dad was a car dealer. So I grew up in the car business. That was my first career. I spent 20 years in the car business, but we left California in '89, came to Oregon. My dad had partners down. We kind of bounced between Fresno, California, and Redding, back and forth. His partners and him had dealerships there. And then we ended up our last year in Truckee. I don't know if you've ever been to Truckee, but it's on the elbow of California, Nevada. It's up in the Donner Pass. It was a great place, but we were going to try to build a Ford dealership in Truckee, California. Couldn't get the land to do that. And my dad had the dream. He wanted to own his own store. He didn't want partners anymore. And so he went out. My mom really loved the Northwest, and we started looking in Oregon and Washington. And I landed in Salem, Oregon in 1989. I was I guess I turned 14 that year, right before we got here. And I had bounced around quite a bit as a kid. And so we got here and I said, man, I'm never leaving. I don't care if this place sucks or it's great. I don't care. I'm not leaving. I don't want to move. So I've been here ever since. So I guess I kind of call myself a Oregon native by now, but I started
Yeah.
off in California like a lot of people that are here. Got into cars with my dad, and I started off washing cars, and I asked him early on if I could be in his marketing department. I wanted to do his television and radio ads. And so as like a 15-year-old kid, he let me take over all the advertising. So I was writing commercials and doing ads. And so I was kind of as a kid, I was just right here in Salem. Everybody knew me. Right outside of Salem, of course, I was nobody, but it was a lot of fun. I had a lot of fun doing that. Ended up getting my girlfriend pregnant when I was 17. We were wanting to get married when we got out of high school. We ended up getting married in between our junior and senior year of high school. So my first daughter was born my senior year of high school. She works for the SMI company today. And then my second daughter was born my second year of college. And I decided at that point, I better just work which I was working full time and going to school. But I said, I better just focus on that. And so I was a little different than most 19-year-olds. I bought my first house when I was 19, already married and had 2 kids. And a couple years after that, it went off the rails. I ended up going through a divorce, and like a lot of, teenage romances do. And I just kind of went off the deep end. I was like, man, I married the first girl, I ever was with, and I had these kids, and I never thought I was going to get divorced. And I went on a wild ride. I felt I had a serious case of FOMO. I felt like all my friends had gone off and gone to college, and they'd partied and dated and done all the things, and I had skipped all that and done, worked and bought a house and all this stuff. And so I felt like I kind of skipped over a step. And so I reinvented myself as a wild man, and I started partying. I became one of the wildest party animals you could possibly imagine. I don't know how I survived it. And I partied through my 20s until I got to 28, and I thought I was going to die. Like I was alcoholic. I was addicted to cocaine, meth. It's a crazy story. I mean, when you look at where I'm at today and the things that I'm doing, people are like, what? Are those your teeth? I'm like, yeah, these are my real teeth. They didn't even fall out. But yeah, it's my backstory. Car guy, drug addict, teenage parent. It doesn't sound super glamorous, does it?
No, you've seen a lot, I think, and I didn't know any of that coming into this interview. So I think it's really great context. I'll tell you the only. So I was just in Oregon for the first time ever this past year, and I said this to Trevor and Dane on their show. This is Pacific Dunes and Bandon Dunes. So I was on the coast, and I absolutely loved it. And this was in May, so I don't have any Oregon connection outside of that, but I do know that what a beautiful state. So
It
very
is.
cool.
It is paradise. It's a beautiful spot. It rains a little too much, but you can travel during the wet season. You're fine. It's a great place to be.
Yeah, and I was looking up some of the weather because I was very curious, and we went there in May, and it was like in the 50s, and I just checked the other day, it was like 62 degrees in Bandon in December. So it's like kind of one of those things where it doesn't get too cold or too hot. But if you're an outdoors person, obviously I've heard great things about being in Oregon. So I want to get to this comeback story, right? I mean, like
Sure.
I'm looking at your Instagram here. Make friends and have fun. Like you've created a pretty cool life for yourself after this downfall. And I'm curious, what brought you out of it? Like, there had to have been a moment where you're like, I can't keep doing this. And I always like to ask people, if there is a pivotal moment, what made you pivot left instead of right?
Yeah, my sobriety journey is I just was going to die. I say I finally got more afraid of dying than I was of living. Alcoholism and drug addiction is really just running from life. It's just not being able to cope with life on life's terms. And so, um, to find the strength, it's a miracle. It's a miracle from heaven. God saved me for a reason. I don't, I think I have purpose today because I'm helping people get sober and helping people buy real estate and whatever else I can help them do. But, um, I finally got to that point where I was like, nobody's going to stop me. I was the guy wearing the suit, had the Rolex, driving a sports car, like just doing stupid stuff. But nobody was telling me to stop. And so, even the cops, I mean, I had times where, I should have got in trouble for things and I didn't get in trouble. I mean, it was just, I got scared, really. I just got really, really, really scared that I was gonna be successful, and I was committing suicide very slowly, and I was gonna succeed. So I truly, in my heart of hearts, did not believe I'd ever see 30 years old. Walked into a meeting of Alcoholics Anonymous at 28 years old, a room full of people twice my age or more, and it was a pivotal moment in my life. I felt love. I'd always, I'd been loved, but I felt love in a different way than I'd ever felt it before, because people there, they knew me, they were me, and that camaraderie, and that closeness, and that transparency, I just attach myself to it. And so, if I make it to April 4th of this year, I'll have 22 years of continuous sobriety. It's an absolute miracle. I give all the credit to God and to the program of different programs of recovery that are out there, whichever one you choose. But yeah, that was the point. So in my business, car business is a party lifestyle. I mean, it attracts partiers. It's, I mean, a good salesperson typically has an addictive personality because sales is a drug. I mean, it's a lot of fun. It's almost, it's like it is about the money because you want to make money, but just making a sale, I think, is what really juices people up. That's why we call ourselves deal junkies. I mean, it's like, sure, I want to do a good deal, but I just want to do a deal. And
Whether you're a new or experienced landlord, one of the biggest hiccups that people run into that prevents them from scaling their portfolio is lack of organization. And most people think that they're going to be fixing toilets at 2 a.m. because of that lack of organization. They're going to be getting calls from tenants, and tenants are going to destroy their house. One of the things that fixes that completely is easy landlord forms. When you're self-managing property, staying organized is one of the most important things that will allow you to scale. Easy Landlord Forms has tenant screening services, state-specific lease agreements, online rent payment systems, and over 500 landlord forms. So you can keep everything in one hub, scale your rental portfolio with ease, and most importantly, make landlording and real estate investing as passive as it can possibly be. So go to easylandlordforms.com and you can use the code WealthJuice, which will give you 20% off any order.
So I carried that on into real estate. My dad got sick and he wanted to sell his store. And it was always my thought that I was going to be a car dealer. I was going to take over for him one day, and that wasn't in the cards. And so, good friend of mine who I'd met through recovery, owned the SMI companies at that time. And he pulled me aside. We were actually in a Bible study together. And he's like, "What are you going to do, man, when you sell this car dealership?" And I said, "I don't know. Maybe I'll come help you sell apartments." He was probably one of the biggest apartment brokers here in the state, and they own the SMI property management company. And I was kind of half joking, but not half joking sort of a thing. And so he invited me to lunch. He goes, we need to talk. And we sat down, had lunch, and he made a proposal to me to essentially be his exit partner in the brokerage side of the company and teach me real estate. And so Brian Miles is his name, and he's a dear friend and mentor of mine. And, he brought me in. I got my license. He connected his desk to mine. We spent 4 years together. He stopped brokering his book of business and started kind of trying to funnel leads my way. And I was making calls and making friends and doing all the stuff. And then about 4 years into that, I bought the brokerage from him, which was about 10 years ago. And then the management company was supposed to go down to his kids, and both of them decided they did not want to be in the company or be in Oregon, and they left. And I had the opportunity to come into the management company as well. And then we've expanded now into lending, syndication, and some other things. So it's just really kind of taken on a life of its own. I'm having the time of my life, but the story, as the story goes, like, it's funny because the people that are around real estate, they're like, oh, this is a strange experiment. Let's see if a car guy can make it in real estate. And, quite honestly, I don't know if I ever was a car guy. I think I was doing that. It was my dad's dream. I felt really, it was an honor to help him, because he started off just selling cars as a kid and ended up working his way up to owning car dealerships, which is a really kind of crazy story in and of itself. But I really wanted out of cars. I wanted to do something different. Real estate always sung to me. So I was in my 30s when I jumped into, because I started in the car business when I was so young. I'm in my mid 30s now, and I get into real estate. I didn't start investing. One of the things that Brian told me when he made the offer for me to be his exit partner was, he said he wasn't going to teach me real estate unless I was going to be an investor. My first response to him was, can we skip the whole broker thing and just go to the investor part? That was the part that really sung to me. And so everything we do, I kind of came in with my selfish motive was I wanted to own more buildings. And so I approached real estate from that direction. As a broker, as a mentee, I was always trying to figure out how this thing works so that I can figure out how I can also own buildings. And through that, it's just by nature, I get excited about stuff. And I'm not one that wants to keep it to myself. And so the SMI DNA is when we have about 50 brokers. We do commercial and residential, but almost all of my brokers are investors. We bring an investor-minded broker in. I think that they're better brokers because they have skin in the game. And I also know that brokers, I see these brokers that are out there still doing open houses when they're 80 years old. I'm like, come on, guys. I mean, you make a ton of money and there's just really no retirement planning in that career path. And so why not pick up even if you're just selling houses and you pick up a rental house every year or something, it doesn't have to be a lot, but just to stack up. I think, the way I look at it is real estate brokers specifically, they're in this industry where they're surrounded by so much opportunity and they don't seize any of it for themselves. And so some of my, competitors or cohorts, whatever you want to call them, we're all, for the most part, pretty friendly with each other, but a lot of them don't agree with me when it comes to having brokers be investors because they feel like there's this sort of, we're competing with our clients and we're going to take all the good deals and all this. And it's just not true. A good deal to me is probably not a good deal to you. Like a deal, real estate is so unique. People are so unique. And I feel like, sure, we get first look at deals, and I think that's the benefit of being in the industry. If you're gonna try to build your own portfolio, why not have your finger on the pulse all the time and be doing deals all the time? Yeah. And then the other thing is, have you read any Napoleon Hill? Like, he talks about, if you haven't, read.
I haven't. Rich. No, I haven't. I mean, obviously, I've heard of the books. Yeah, it's
going to change your life. I don't know what. It's a weird book. It'll kind of like reprogram your brain or brainwash you or something. But he talks about how he went around and spent years interviewing. I think it was like 1,500 people that were wealthy, trying to figure out what that common thread was amongst all of them. And so I kind of took on that approach. It's like, when I'm on the phone and one of these owners actually wants to talk to me, what I'm going to do is I'm going to just pretend like I'm their partner, and I'm going to say like, hey, I don't really know what's going on, but I can play a part on your team. I can go find you deals. I can help you sell something, go find the money to finance something, or whatever I can do to fit in to help. And then I'm just asking questions like, how old were you when you bought this? How did you finance that? How did you, what kind of creative structures did you see back in your day? And those sorts of things. And so I really took it as an opportunity to get an education. I wanted to do deals and make money, obviously. I think, everybody needs to eat. But I really saw it as a bigger opportunity and I started connecting with these people. And, it's interesting, people that are successful, especially in real estate, I noticed, everybody's really generous with their time and in sharing their wisdom with you. They love to talk about their deals and they love to talk about how they accomplished what they accomplished. Like some people think maybe that's rude to ask them certain things. But if you're genuine and you want to learn, like most people like me, if you want to sit down and you want me to tell you how I did it, I'll tell you exactly how I did it. I'll give you tips on how you can do it. I think that's the difference between a scarcity mindset and an abundance mindset, is that I feel like there's more than enough money for all of us. There's more than enough deals for all of us. We can all win. Like, let's do this and let's do it together. And in a lot of cases, what happened for me is, I ended up becoming partners, not only with Brian, but with other clients of mine. And I went out in search of people that were doing what I wanted to do. And to this day, I've never bought a deal without a partner. I have partners in everything. I actually value the partnerships more than I do the buildings. I love people. The whole my two rules in life are make friends and have fun. I'm a relationship guy. I just love being around people. I love talking to people. I love helping people. And so anyway, that's where my heart is. So I transitioned really, from cars, which, car biz, people need a car, but it's just kind of I don't know. Most of the time people are buying a car. It's not a great financial decision. They drive it off the lot. They're upside down. And it's just, it's just not, it's not real estate. Real estate, is this life-changing thing where if people can buy a couple of buildings or, they can get crazy like me and go buy a whole bunch of them if they want. But it's just absolutely life-changing, not for you only, but for everybody around you, for your family, for your friends, for your clients and everybody. So anyway, I love the industry. It took me about 4 years. About 3 years from the time I started in real estate till we bought our first deal.
Got it.
And I was taking deals to Brian all the time going, what about this one? Every single day I'm just looking at deals. What about this? What about this? I don't know what a deal is, and I think that's kind of what keeps a lot of people out of real estate is they're like, well, I want to get in, but I don't understand, like for me, what a deal is. What move do I need to make next? Where should I start? Do I start small or do I listen to Grant Cardone and go try to buy a 100-unit building and raise money and do all this stuff? So everybody's different. Everybody's unique. Everybody really has a different appetite for risk. Some people love high leverage. Some people like to own everything outright. Some people love apartments. Some people love office or retail or, mobile home parks or whatever it is. There's so many different asset types, so many different areas, so many different structures, so many different personalities that go into that it's a fun puzzle to try to solve, to piece all that together. So I jumped in, I fell in love with real estate. I started buying deals. So I was just a little over 10 years. I bought my first deal, and now our portfolio is probably close to 1,400 doors or something like that with partners.
Yeah. So I want to double click on something here about the partnerships aspect too, because I talk to a lot of real estate investors, and I would say the majority, there's a lot of partnerships in real estate, but business in general, most people say, oh, like partnerships, I got hurt in this partnership, or this partnership went sour, or this didn't work. And I love that you're leaning into them because I've had partnerships that have gone sour too. But the best deals and the best and the most fun and the things that I've done most successful have been with amazing partners kind of similar to what you're talking about. So I'm curious on your approach to that. Like how do you know if you have a good partner, and I'm actually curious how many partnerships you have. Are they all different, or are they all like within a core group?
Yeah, they're all kind of converging on themselves right now. So all of our I've had a bunch of little scattered partnerships. It's like, oh, we want to go buy this fourplex. We need to grab so-and-so and go do this deal. And a few different things have happened over the last several years to where our partnerships have sort of you kind of aggregated into groups and bigger companies. And so obviously my role, I own management company, brokerage, lending team. One company we started a few years ago is called SMI Fund Management. My partnership in that is a guy named Logan DeVos. And Logan and I, we started over 10 years ago. We were trying to go out and buy some stuff and he was another broker at another place, and his family owned a management company. So kind of in a similar situation. I love to find partners that are smarter than me, that have different skill sets than I have. I'm a people guy. I'm not a super analytical spreadsheet, sit behind a report all day kind of a dude. I'd rather sit here and have a conversation. And so I'm the relationship side. I call myself the mojo. It's like I have a ton of energy. I think big, and I want to go do things, but I don't necessarily have the skill set. Like, there's no way I could be doing what I'm doing today without the partnerships that I've had. Don't get me wrong. I've had plenty of partnerships that went south. I've had some partnerships where it's just like, hey, we started out, and sometimes it ends in disaster. Sometimes it just ends. It's just like, we're not really going in the same direction anymore. A good example is Brian. Brian was my mentor. He taught me pretty much everything I knew to get started about real estate. And we bought several buildings together. And then just over time, they wanted to retire. They were older than me. They wanted to kind of move on. I was very aggressive, and I was still starting to build, and they were ready to back off the gas. And so we just stopped buying together. It wasn't that we've never had any problems in our partnership. It was just kind of their goals now started to change. And so that's one thing I think that, a lot of times, you're like, I want to go do this thing. I want to do real estate, but I don't really want to do it by myself. I'm kind of scared to do it by myself. I want to do it with somebody else. And if you just go pick your buddy and both of you don't know what you're doing, it could end in disaster. Like, you really need to be strategic about your partnerships. You need to find people that, you need to find somebody that's going to bring money to the table, or somebody that's going to bring expertise to the table, or somebody that's going to bring time. I mean, those are really the three ingredients to a good partner. So I love to have partners that are smarter than me. I prefer it if they're younger than me, because I just, the news is just coming out now. My next mentor after Brian was a guy named Paul Curley. He just died about a week ago, and Paul had a huge impact on my life, and we owned a lot of real estate together, and he taught me a lot of stuff. I mean, it was a very, very special friendship that we had, and a special partnership. He was my number one client for a long time. We became close friends. We ended up becoming partners. He actually sort of counseled me through some of my bad partnerships that I had to get out of. And then we ultimately ended up becoming, partners, and it was almost like I called it father son, and he'd tell you he was my better looking older brother. But yeah, he was an amazing man, and the loss of him is horrible. So there's a problem with partnerships. As he was 26 years older than me, passed away suddenly, and now I'm partners with his wife and his their estate, and now we got to figure out how we're going to navigate all that. So I think if you could find somebody younger than you, smarter than you, and richer than you that wanted to partner with you, you'd be doing pretty good. You'd be hitting on all cylinders at that point.
Yeah, I think that's hard to do. Obviously, all three of those, right? I mean, the richer and younger. It depends how long they've been in the game. But I wanted to talk about your partnership with the other guys with the Deal Junkies, because this is interesting to me, because I think a lot of partnerships. For example, my partner Ryan, I'm 34, he's 35. We have another partner, Sean, who's 36. Right, so we're all in the same age. We go take down deals together. But did you say you're in your 50s now?
I just turned 50. Yep.
Just turned 50, and your partners, at least the two guys that I met, are in their 20s, right? So maybe 30.
Dane's 26 and Trevor's 29. Mark is, I think, 33.
Yeah. So
Logan is, I think, like 36. So all of my key partners are quite a bit younger than I am.
Right. So I want to ask you about how that plays, what role you play there, and then how you decided that I'm going to trust these 20, 25, 20, 30-year-olds with this partnership. And I think I really love that you're doing this, because it's not like these guys have amazing skill sets and they're really good at what they do. And I think a lot of people in your age would turn away people in their mid-20s because they're like, oh, you don't know this, or you don't know that, or you haven't seen what I've seen. But that's the opposite approach that you've had. So tell me about that partnership, how it formed, and like why you trust these guys like you do.
Yeah. So, I mean, one of the things about me is I'll meet with anybody that wants to get together and talk about real estate. I just love it. And, I have a rule. It's got to be at least 90 minutes. Usually it's going to take 2 or 3 hours. And so I have people reach out to me all the time and want to go grab coffee, grab lunch, whatever, and sit down. And so I love that mentoring aspect of it. I love helping people get started and think through what they're going to do. And so I've met with, I don't know, I might be exaggerating, but I'd say thousands, of people. It's a lot. I sit down a lot with people and spend a lot of time with them, and I give advice. And like most advice, sometimes a little bit of it is taken and others is not. But, there's something special about these guys, Trevor, Dane, and Mark specifically, that I saw in them. I kind of, in doing that, was sort of on a hunt. I was out in a way I didn't even realize I was doing it, but I was kind of interviewing, potential people that might come with me. And part of that is just because I knew I didn't have all the skill sets to do what I wanted to do. My vision is bigger than my brain. I'm not the sharpest tool in the shed, honestly. I mean, to take the recovering drug addict teenage parent car salesman and try to build a multi-$100 million portfolio. It sounds a little crazy. But I met, just one example with Trevor. I met with him. I spent a few hours with him and gave him some advice, and he thanked me afterwards. I sent him a little email and encouraged him and gave him a couple of tips. And him and I just locked in together like immediately. As soon as we started talking, we could tell that we both kind of had that. There's some sort of special sauce that's sort of there. We get along. We're both super passionate about this real estate thing. And about 6 months after our meeting, he called me up, and he says something to me like, okay, I just went out and bought, 32 doors or something like that. He's like, what do I do next? And I'm like, I think you need to come with me. And so we had another meeting. We sat down. I'm like, man, if you're going to do this, like, we got to go do it together. And I think, in the next 6 months after he came with me, we probably bought 100 doors together. So, it was just, he had a fire. He was super, super intelligent. He had the analytical engineer brain that I don't have. And so there was a real synergy that happened there between kind of my human element, and I call Trevor, I lovingly, I call him my robot. He's Trev GPT. And so anyway, I just recognized that, hey, this guy's got the ingredients, and I didn't know exactly where all that was going to go. So we just ran off and started buying some deals together, and one thing led to the next. I was actually out already doing some deals with Mark. I always wanted to build stuff, but I didn't know how. And Mark was out building some stuff. He needed some help. He needed somebody to sign on a loan, put some money in a deal. I'm like, yeah, I'm going to take a chance on this guy. And ultimately, Mark and I became, very close, and I was super impressed by his skill set. And then Trevor had brought on Dane kind of as his mentee. And so, as Paul is giving me his wisdom, I'm giving it to Trevor. Trevor's passing it down to Dane. Dane is an incredibly intelligent young man, and he was clinging on to it. And so then, I don't know exactly how this all worked out, if Dane planned this or not, but Dane started hanging out with Mark all the time. And we were, none of us, the whole thing wasn't connected yet. And Mark was sort of mentoring Dane also. And Dane came, I think it was Dane's idea. He came up with, he's like, hey, we got all these cool ingredients. Like, why don't we piece this all together and make a company out of it? And so that's where Stack Asset Group came from, was from that partnership. So I'm running around doing some deals with some other guys, and then that becomes this company. I was like, hey, we can, instead of onesie twosie in this thing and building something every once in a while or buying something every once in a while, like, we could really build this machine and go out, and it's amazing when those ingredients all come together, the kind of momentum that you get. And so it's really exciting to see. Very, very similar to, but also quite a bit different in the SMI fund management company with Logan. Is Logan and I were doing the scattered partnerships and stuff. And we bought 3 or 4 years ago, we bought a 100-unit student housing complex at the OSU campus. And we had to do 9 exchanges to get into that deal. And that was, I call that Logan's magnum opus, but he he facilitated this whole transaction, and there was just different little partnerships that had to be maneuvered, and like, hey, do you want to come to this deal? And it was a super complex transaction. At the end of that, Logan called me up and he's like, man, can you imagine if we just had control over this portfolio to where our partners trusted us and we could move these pieces around to where we could go trade 9 deals into one and upgrade our portfolio into these institutional grade assets. And we, instead of onesie twosieing it and trying to jimmy rig all of these little partnerships together to do it, we just put it all into a fund. And so we grabbed all the partners that wanted to come with us, and we pulled all of the assets into one fund, and we started a 721 exchange where we allow people, and they can put cash in if they want, but what we're really trying to do is get people to contribute their real estate in, and we call it the SMI Legacy Fund. It's a 721 fund. You put your real estate into the fund, and then we give you, for exchange, we give you shares of ownership in the whole portfolio. And so that allows us to bring in people who are ready to, they don't want to put more debt on their property. They really don't want to run the day-to-day anymore. They don't want the legal liability of owning that property, but they still want to be in real estate, and they still want to grow. And so that was a very interesting one where kind of all of our partnerships converged to become a fund. And so those are kind of the two things that we're doing today between SMI Fund Management Company and Stack. They overlap a little, but the goal is to keep them from crashing into each other. Stack is really more development, very heavy value add, heavy lift type projects and stuff like that. But just examples of how we started with a whole bunch of scattered little partnerships, and then we were able to organize them into larger machines.
Gabe, when you say, I don't think I've ever heard of this before. When you say bring your real estate into the fund, I'm curious on, is somebody who owns a piece of real estate selling the real estate to the fund, or how are they or are they bringing a deal to the fund and the fund buys it? Like, how does that actually work?
No, it's something they already own, and we'll put new debt on it or pay off their debt. They have to contribute a certain portion of their equity in. It allows the fund to bring the property in without really having to come up with much cash usually, because we can just go finance, 50, 60% of, maybe a little bit more of the property. They can take their equity in shares of ownership of the rest of the portfolio. So let's say you own a fourplex today. You're like, hey, this is great. I've got a bunch of equity sitting there, but I'm not really getting much of a return on my equity. I've got, maybe I don't want to deal with putting more debt on, or I don't want to go try to upleg that into a bigger property. Really don't like running the day to day, but I want to still get the benefits of ownership. I want to have some cash flow. I want to have depreciation, appreciation, and principal buy down. But I want to be more passive. I really don't want to be involved in the day to day. Those folks, if they trust us, they like our business model and what we're doing, they can put their property in with us. And now, instead of owning 100% of their property, they own a smaller percentage of a much larger portfolio. And then we go and we move the pieces around. So, we're selling stuff and doing exchanges and out buying deals and doing all those things. They're picking up new depreciation as they go. They've got, they're hopefully going to have a bigger portfolio ultimately, which means they're going to have more appreciation, more cash flow as we move along. Really what we're doing, a simple way to put it, is we're working their equity harder than they would work it themselves. And so, yeah, it's not for everybody, but for somebody that's sort of at the end of their cycle and they're like, what do I, real estate is the greatest wealth creation tool of all time. I don't think anybody could prove that wrong. But the problem is with real estate, there's not a really great exit strategy. So what do? You've built all this equity, you've worked your butt off your whole life, and you've got this thing. And what do I do with it? Well, I can go sell it and pay a bunch in taxes. That doesn't sound very fun. You could sell it on contract or be kind of creative and mitigate some of your tax exposure. Now you become a lender. So now you shift from being owner to lender. So there's a few different avenues that you can go, but it's not super enticing to most. Most people just pass away, leave it to their heirs. The heirs, you pay estate tax. Heirs get a step up in basis. I've been a broker long enough to know that most kids, when they inherit something, I say kids because a lot of them are, they're older, but they get the property and they're like, hey, let's just sell this thing and turn it into cash. Most of the kids don't want to operate the buildings. And so it's just not an easy asset type to deal with at the end of your investing cycle. And so this is one, I think, very, very cool solution. The IRS tax code 721 allows you to contribute your properties into a fund to where for exchange of shares, there's no tax event there. So that, like you said, did you sell it? Not so much. It's a contribution. And so you can kick that can down the road even more, and not pay taxes as it comes in, and continue to benefit with what I think are all the major four economic benefits, are the only four, and you can divest yourself from all the things that you don't want, all the liabilities and the work that's involved.
Hey, let me pause the episode real quick. Let me know if this sounds like you. You're making six figures, you're climbing the corporate ladder, investing in your 401k and your Roth IRA, and maybe even a brokerage account. But deep down, you're asking yourself, is this really it? Like, am I just going to do this thing for the next 30 years and hope to retire in my 60s? That was exactly us just a few years back. We were curious and excited about real estate, but overwhelmed and without a roadmap. If you fast forward to today, we've built a portfolio of over 80 cash flowing units and grown our net worth to over $2 million. We made it our mission to help busy professionals like you take that same leap and start building generational wealth for yourself and your family. That's exactly why we created the Wealth Juice Inner Circle, a private real estate investing community designed to help you get your first rental property under your belt in as little as 90 days. Inside, you'll get direct access to us, our full investing network, private off-market deals, and our exact playbook, and a community of investors who are closing deals every single week. That first property changed everything for us. We always talk about it. It was the true foundation for building generational wealth. And honestly, if we had access to something like this when we first started, we'd be 10 times further along by now. So if this sounds just like you, click the link in our show notes and schedule a call with me. Yes, me. I'll be taking the calls. We'll go over your goals, map out a plan, and get you ready to close your first deal. Let's get it. I think it's brilliant. And I don't know. I mean, I'm just being candid with you. I understand how funds operate. Oftentimes I'm seeing funds and people are putting in dollars into their funds as like, exactly. Cash.
Yeah.
I haven't heard of putting your assets in it, but it does make a lot of sense. And as an example, like I love real estate. I think it's the best asset in the world too, but I've noticed the liquidity issue that happens when you own real estate. Like so Ryan and I
Always.
are GPs. We're GPs in 60 or 70 units. And because we have other partners in our GPs, I can't just go borrow against that myself, right? Like there's a decision, we have LPs, like if we did decide to sell, it would take 60 days or 90 days. I just sold one of my last rental properties one of my first rental properties. I'm selling off one of my last ones. And from the day I decided that I wanted to get the 4X liquidity that I had in this property, I turned, it was a small deal. I turned 20 grand into like 80 to 100. From the day I decided to the day I got the money, it was like 120 days, So it's like, and that was if everything went right, So like I get it. It's like best wealth multiplier. The liquidity is not really there. And I could have probably 1031 or done something else, but then I needed to access the cash because I needed to do something.
Yeah, there's no asset type that you could go into where you'd turn your 20 into 100 like you just did. Like you can go talk to any stockbroker, talk to any wealth advisor.
Now it was over 4.5 years, but still, yeah. Exactly.
I mean, 5X in 5 years, I'll take it.
Yeah,
I mean that's a great deal. But you're right. I think one of the things Brian taught me early on was one of the key principles to real estate is control. And I was kind of like, well, I'm not really a control freak, and I got partners that are smarter than me and this and that. But he wasn't really talking about that. He was talking about like, how do you control the pieces on the chessboard? You hear on Deal Junkies, Mike Nuss is always talking about the chessboard. And if you've got all these pieces, but you can't move them, it's very difficult to work your portfolio and do what it really needs to be doing. And so we analyze, both companies, we're always analyzing, which properties we could turn into better properties and which ones should be refinanced and which ones, we're constantly working that. Paul, my mentor that just passed, he was a buy and hold forever guy. And I think buy and hold forever is probably, if you asked AI which one I'm going to make the most money on, buy and hold forever is not a bad plan. If you can keep buying real estate and find ways to get your name on assets. But I think to upgrade your portfolio continually is a good idea, especially, if you're sitting in a couple of plexes or whatever, like there's no reason to stop. To me, the smaller stuff, anything let's call it 20, 25 units or less, to me, is always going to be trading stock. You're always going to ride that wave out, and there's going to be a point where there's enough equity there to move it into larger. What I love about apartments is that it's the only asset type I know that where the more of it you own, the less risk you're taking. And so, you own a duplex as an example, and one of your tenants leaves, you have 50% vacancy. But in my 100-unit building, if a tenant leaves, I only have 1% vacancy, and I like that. I like knowing that I've got 99 rents coming in every month, even if somebody moves out. And so I think scale is a really big thing. You get lower sale costs, better interest rates. You just get like the economies of scale that happens in real estate, and specifically in multifamily, is really amazing. I mean, it's something I think that anybody that gets in, you may decide, okay, I'm good with 100 doors, or I want to buy 500 doors, or whatever your goals are. That's fine. But I think just recognize that every duplex can become a 100-unit complex if done correctly. And so every time I buy a piece of real estate, I think of it almost like I'm planting a seed. My partner Paul would say he was sending his ships out, and so you'd buy this asset, you'd hang on for dear life, and you wait 5 or 10 years, and either for him, he's doing big cash out refis, and so he lived on debt. Very much like everyone's talking about Elon lately, where it's like, he creates these businesses that have almost $1 trillion in value. Then he can go borrow $100 billion and it's tax free because it's debt. And so debt is a very, very attractive thing about real estate. And being able to take your paydays that way. It's also very dangerous, and you got to be super careful that you're not over levered. You don't get yourself in a position, because I'll tell you, over the last 3 years, when the banks stopped lending, not only did transaction volume stop, but lending stopped. And so if you're solely, I don't know, reliant on turning some of those assets into cash or refinancing them over the last few years, it's the money stopped. The money faucet got turned off, and then it's like, okay, well, what am I going to do now? Just hang on for dear life till the market comes back. It's starting to come back now. You start making those moves. But if you're totally dependent on those markets, this is where very low leverage is exciting, because it's like, hey, when the value of my property dropped, that's okay. I'm still cash flowing. It doesn't matter. And I'll just wait till I don't have any loans due or whatever. And I'll just wait till the market sort of bounces back, and then I'll sell when I want to sell. Versus when you're flying pretty close to the sun, you got to make a lot of those moves. And if you're like us, you're always buying, you're always selling, and you're always refinancing. And
Yep.
So how do you navigate that in the downturn that we've had in the last 3 or 4 years? It's been very, very difficult.
Yeah, that is actually such a great point, because so I bought my first piece of real estate in 2018. The only year that I didn't buy since then was 2024, actually. But my whole thing is like I try to buy every single year. But the 2021 and 2022 deals are the most. We still own them, but they're
Yeah.
the ones that we have the most hassle with, because we bought them at 4-ish% interest rates, and then they went up to 7, and
Yeah.
rates went up to 7, and I couldn't do what our original plan was, so we're holding on, right? But that
Yeah,
is
your rate goes up. Now your debt cover doesn't hit. You can't get the leverage you're looking for, so your proceeds aren't high enough. Plus, in the meantime, your expenses have gone up, your rents go flat. It's just been a perfect storm. Really, it's just been a survival mode. I think
yeah,
just
and
make
that's
sure you hang on and don't lose any properties.
exactly. That's just the real part of this. That's
Yep.
so I actually want to ask you about, maybe if you were to, because you love this stuff so much, like the actual deal. I really want to know like the ins and outs of, maybe if you could pick one deal, even if it's that 100-unit, that student housing. Like, I'm so curious on like what you purchased that for. It doesn't have to be this deal, it can be any deal. What you purchased it for, like what you would expect a deal like that to cash flow. What's the time frame? You try to hold it forever? How different are student rentals? Like, if you have a deal in mind, maybe one that you've exited already, I don't know. It's up to you. I'm curious about if you could take me through some of the steps.
Sure. Yeah.
Yeah.
This goes back to your partnership question, which is really good. When a partnership sits down, it's like, what are we doing this for? How long do we want to do it for? What is the goal of this asset or our portfolio? Are we trying to trade up into other stuff? Are we trying to buy and hold forever? For me, that going back to the Napoleon Hill point of my conversation, I wanted to try it all. Like, I was just like, I'm not smart enough to figure this out. Like, I don't know what the right way to do is, because what ended up happening for me is I'm talking to all these guys and everybody's rich and they all own real estate and they all disagree with each other. The only thing they do that's the same is buy real estate. And everything else is different. One person says that deal is crap. And the next person says that's the best deal I've ever seen. It's like, there's no rhyme or reason to some of this stuff. I would see people that were worried about not having enough cash, like we're talking about. And then I see other people who are worried about having too much cash. So it really just, it opened my eyes to the fact that there's a lot of different ways to do this. And there's a lot of different ways to do it right. There's no one right way to do it. There might be one right way to do it for you. For me, what I've found, I wouldn't say, well, there's a few different ways I like to buy deals, but I would say my favorite way to do a deal is to keep a seller in the transaction somehow. Whether or not we're asking them to carry a side note for us so we can come in with less down payment, or we keep them on as equity. Even like talking about the 721, that's kind of like keeping the seller's just putting the deal in with you. Like they're almost just giving you the real estate, right?
Why do you, well, maybe you'll explain it. I'm curious why. What's the reasoning?
Well, I love leverage. Where can you go? Like I started my portfolio, I had $10,000 in my bank account. I was coming off of unemployment, going into real estate, just starting off as a broker, which takes a few years to get up and running. So I started with nothing. I didn't start with, here's 50 units and, I inherited it and I can go trade up and do whatever I want. I started literally almost at zero. And so one of the things I've said before is I couldn't buy real estate with my wallet. So I had to figure out how to buy real estate with my mouth. And what that meant was going out and building the right relationships and building trust with people and finding people that wanted to it started, seller carry with a low down payment. That's all I can do. Then it turned into, why don't we go put a loan on it and you lend, maybe you can do a side note, give me a personal loan for, against other security or whatever. And we can find a way to leverage something else so that we can come into this deal with less money. Then it turned into JV type stuff where it's like, why don't you stay in the deal with us? One example is we just bought a 36 unit last year. Developer had built it. He was having a hard time stabilizing it and he was getting in trouble. We came in, we paid off his second on the property, assumed his first. We kept him in the deal with us at 19% ownership because at 20% or more, he'd have to sign on new debt with us. If we went to a refi, we ultimately decided that we were going to sell that asset. But if we were to hold on to it, he would have just, and he's still our partner today. So I love bringing on partners and doing partners that way, but I also love to make the seller a partner, either a lending partner or an equity partner, trying to keep them in a deal, like even with the fund where they contribute, now they become a partner in the fund with us. I think part of it is I just love to put the two sides on the same side of the table, and we all work together to try to make it work for all of us, rather than, there is a time and a place to rip a deal and, somebody really needs to get out and they need the money or whatever. And it's still a win-win because they need the money and they need it quick.
But you're not pitting each other against each other. That's the whole
the whole game of just like, let's rip this deal and then let's inspect it and beat them up again. And then let's get the appraisal and beat them up again. And let's get to the closing line and beat them up. And it's just, I don't know. It feels just kind of greasy to me. Like it just doesn't sing to me. It's not fun. I like it better when everybody can win. I want everybody to be able to win. And I believe with an abundant mindset, everybody can win. And so we always want everybody to get what they want. We want the brokers to get what they want. We want everybody to get what they want out of that deal. And in the win-lose mindset, if you've ever read 7 Habits by Stephen Covey,
mm-hmm.
That win-lose mindset is that I can't win unless you lose. And there's a lot of people out there that are very successful that play that game, and they might be more successful than me. But it's not fun for me. It's not, I don't like it. I don't want somebody else to lose. It just doesn't feel good to me. So that's just not the way I'm wired. And so keeping a seller in the deal with us somehow, there's always creative ways. What's interesting about real estate, you can use your imagination. You can come up with whatever you want to make it fit. When we know what we want as a buyer, we have a very, very highly defined buy box of what we're trying to accomplish. And the seller, if we can help them understand more, a lot of times they don't really know what they want, but if we can really help them define, I guess you could call it their sell box, like,
Yeah.
one of the
Terms or
questions I,
price or what
yeah,
yeah.
what are you trying to get? And so what some of my brokers, when I train my brokers, I tell them, like, the first question when somebody says they want to sell is why. Like, so it seems like a dumb question for a broker to ask. And I've talked myself out of some listings this way, because it's like, well, why do you want to sell? What are you trying to accomplish? And they'd be like, oh, well, we want to get some cash out, or we want to trade up, or we want to do this. And it's like, okay, well, let's break this down. And I treat every one of my clients like they're my partner. And I treat, like, if I were in that deal with them, what is the best decision we can make going forward, and truly be an advisor to them to go, maybe selling isn't the right idea. Maybe we should get that one refied, pull some cash out and go to another deal, or whatever the case may be. There's a time and a place to sell a property, time and a place to do a 1031. But let's really ask why. How much money do you need? When do you need it? And, I think the overwhelming majority of people selling actually don't need all the money out of their deal. And so if you can get them to contribute that in some way, either in the form of a loan or staying in as some equity, or whatever the case may be, there's a lot of different creative structures out there. I say that I do real estate more as an art than a science. And it really is, real estate is people. I don't think about real estate as the buildings. I think about real estate as the people. That's what's behind it. What is it you're looking for your life and your retirement? Maybe what you want to pass on to your heirs. What is it you're really trying to accomplish with this portfolio? And a lot of people, when they got started, they were just like, hey, man, I just want to make some passive income, so one day I don't have to work as hard, or I can retire, or whatever the case may be. And you kind of develop a new problem, because you build something up, and the cash flow may seem very small. I did this in my own portfolio. I'm like, man, I just want to make $5,000 passive income, and then I don't have to grind so hard and hit the phones all the time and do all. It's like, I love selling, but it's like, at the same time, it's like this curse. It's like, oh my God, I got to get up every day and do this. You kind of had to have that pressure all the time. I wanted to relieve that pressure. I wasn't even paying attention to my balance sheet. I was just like, man, I just got to build this passive income thing up. And I did it. It didn't take me very long. It took me a few years to do it. Once I got there, somebody taught me how to build a financial statement. I looked down, I'm like, I'm a multimillionaire. And then I thought, I am so dumb. Like, I don't even, it's like I was thinking this big, and by accident, I was doing something this big. And to be able to tap that equity to now go buy better assets, or what more assets, or whatever the case may be, what happens is this snowball starts to roll. And you hear about compounding interest, and most people understand compounding interest as like, oh, I got a credit card and now it's 25% and I put more on it, now I'm just paying the interest off, and it grows and grows and grows. People get into that snowball of debt going in the wrong direction. You can build your investments in the same way, to where they snowball and snowball and snowball, and you can't even stop it from growing. Like, it's just one day you're like, you look back and you're like, what in the heck? How did I build this thing? And now you're responsible for this large amount of equity, and what am I going to do with it? And so some people borrow against it. Some people trade up into other stuff. Some people just pay their stuff off and take their cash flow and live on a very low return on equity, because they're like, that's safe. I can sleep at night, and I make enough money. I make more than I need. And I've got this big, golden goose sitting over here. And if I ever want to do something with it, I can do something with it. And
Yeah.
so
I mean, this is such an interesting thing, because I feel like I'm like looking at hopefully a part of what my future looks like when I'm 50 years old, because I've been spending all this time trading up and then trying to do the right thing with the equity, and you never always do the right thing. You just do. You have the information that you have in front of you at the time, and you look back, I shouldn't have sold that one, or I shouldn't have done this. But what I have found is that when your net worth stacks up and you're like, you have X amount invested, having $100,000 invested, if you're able to get a 5% return on that, that's not a lot of money. But if it's 500,000, it starts to grow a little bit. If it's $1 million, you're like, oh, wow, this is impactful. And then it gets a little bit bigger. And then it's like, you're right. That's the snowball that starts to build. And then you have the optionality to start to make it not just grow just to grow, but grow for the sake of doing exactly what you want to do, which leads me to one of my last questions is I'm curious about what your goals are now. You've 200 million in real estate, right? I'm sure you don't really have to keep going. You love the deal. right? So like, what is
I'm a deal junkie.
deal junkie? Exactly. So what's the, maybe talk about short term? What's 2026 look like? But then where do you want to get to in the next 10 years? Like by the time you're 60, you're in this, this is on the horizon. Like, what's it look like?
Yeah, I mean, for me, I think the joy I get out of this is building the teams, um, watching people's lives change for the better. Building that financial freedom and that time freedom that everybody's looking for. It does take some time. It takes longer than you think. Real estate's a very slow thing. I wouldn't say by any stretch of the imagination that I feel like I've made it. I feel like I've made it to another level, and our companies are maturing and they're turning into um, just we're just becoming better companies. I've always said I don't want to build the biggest companies. I just want to build the best. I want to be the best at what we do, and I believe that if we're the best, we'll grow at whatever rate we're supposed to grow at. So I like to do it at a sustainable pace. Um, Paul taught me to think big, and so I'm not the whole 10-year horizon thing. If I can be alive in 10 years, that would be amazing. I didn't think I'd make it to 30. Here I am at 50. So I cheated death. My number one goal is to make it to the pillow tonight sober and wake up tomorrow alive. Thank God for another day and play the game, man. I mean, at the end of the day, whether it's good or bad, as long as I'm in the game, I love it. I want to keep playing it. It's so much fun to see these young guys around me that are energetic and have big ideas. Um, I mean, look, I feel like if I put a number on it, it's going to be too small. And so I have more than I need. I have everything I want, everything I need. I'm pretty content in terms of life. Like I'm not, I'm not. I don't want for anything, and that's great. But it's not. It's not. It's never really been about money for me. Money's fun, and you can buy some stuff. You can help people. You can do a lot of good things with money. Um, but I think I'm just super intrigued by how powerful real estate is, and I just love these. I love these guys that I got around me, and I love having conversations like we're having right now. It just juices me up. That's what I love. I love the name of your podcast,
Oh,
Wealth Juice.
yeah, thank you.
I just I get so juiced by this, and be wealth and being rich and all this stuff in today's world is sort of I don't know. People have a hard time with that word. Like I think it's like kill the rich, eat the rich, whatever. I mean, like they kind of villainize these successful people. I think that's wrong. I mean, sure, there's probably some bad people out there that have made money, but I don't think money in and of itself is a bad thing. The Bible says that the love of money is the root of all evil. It's not money that's the root of all evil. You can do a lot of really, really good things with money. So my goal is I want to stay alive, and I want to keep having fun for as long as I can have fun, and I want to keep doing deals, and I want to add the mojo to the team and just stay high energy and have fun, and people talk about retirement all the time. To me, that sounds awful. Like I can't imagine. I've had some partners that have retired in the first year or two. They're like, "What do we do? This is crazy." It's like I don't even know what to do with my life. They've found the hobbies and the things or whatever to have fun. For me, I'd say that this is my hobby. This is what I do for fun, and so I don't want to work myself into the grave. Um, but I sort of imagine myself being able to be wherever I want to be in the world, and sitting on a beach somewhere doing a deal.
Yeah.
Because when I'm sitting on the beach, I'm not thinking about snorkeling. I'm thinking about somebody picks up the phone and says, "Hey, we've got a hot one. This is awesome. Let's do a deal." It's really just what gets me up in the morning and what makes me excited.
Yeah, it's hard to turn that off too. I mean, I've thought about just like what vacations look like for me these days. And like I think that if I put my phone down, like don't get me wrong, like I love being in the moment and enjoying life, but it's hard to shut that part of your brain off. But I think one of
Yeah.
the things that you've gotten good at from what it sounds like is like you really did have fallen in love with the process. People say to do that, and it's like I get it, but like what it actually looks like, I think is what you're doing.
Yeah, this is I might make it sound easy, but it's not. It's hard. And if you don't love it, it's just going to make you miserable. So I mean, I would say, like I've said it a few times already, make friends and have fun. If you're out there making friends and having fun, life is good, man. And doing deals can be a lot of fun. Having fun with your partners, having fun with your buyers, your sellers, your brokers, and really bringing that spirit of abundance into everything that you do, and being able to do what you want to do with your time. I love the things that I do. There are things about it that I don't love, and that's one of the reasons we have partners. It's one of the reasons we have employees. It's one of the reasons we have third party people that we hire stuff out to. There are some things that we don't enjoy doing that still needs to be done. And so that's my goal going forward. Is I want my days to, I want to be in control of my time and the things that I'm doing in my day, and I want to do the parts of this that are fun to me, and I want to surround myself with positive people doing amazing things. And I think that so far I've been blessed to be able to do that, and I'm just gonna keep going, man, one day at a time.
Yeah, it sounds like you're already winning, which is a beautiful thing. So Gabe, this has been awesome, man. It's just good to get to know people who are more successful than you. That's why I do this. You said you want to be I don't know if you use these exact words, but like the dumbest guy in the room. Like that's kind of how I think. Like I want to have conversations with people who have done it at a better level than me. That helps get me better. And I've found that real estate investing and entrepreneurship and wealth building, I've never found more generous in giving people that give back. And like even this hour that you've given me, like your time is valuable. So I genuinely appreciate it. I think it goes a long way. And I think people are going to get a lot out of this episode. If people want to learn more about you, your story, network, maybe bring you a deal, I know that might really juice you up. What is the best way for people to get in touch with you or your company?
Yeah, they can find our websites, stackassetgroup.com, smifundmanagement.com. If anybody needs help with deals, they're out in the Oregon market. We're smire.com. If you need property management, it's smiproperty.com. And you can hit me up on Facebook is usually where I'm at. I've got people managing some of the other platforms and stuff. But if you want to reach out to me, hit me up, and I'd love to hop on a call or go grab coffee.
Love it.
Block out 90 minutes, man, because it isn't going to be a short call.
Love it, Gabe. I appreciate it, man. This has been a blast. Thanks for coming on.
Thanks for having me, Corey. It's been fun.
Before we wrap this show up, I want to leave you with this. If you're listening to the show, chances are you're doing pretty well in your career. You're making maybe six figures. You're putting money into your retirement accounts, maybe stacking some cash in a brokerage account, but you're still waiting for that next level. And here's the truth. Waiting just costs you time. Every month you're on the sidelines is another month you could have had a property paying you and another step closer to financial freedom that you didn't take. Ryan and I know this because we stayed on the sidelines too long. We talk about this sometimes. We had the money, but not the guidance. And once we finally got our first property, everything shifted. It was the catalyst that built our entire portfolio and ultimately gave us freedom. And that's exactly why we built the Wealth Juice Inner Circle, to cut out wasted time, just give you the exact blueprint and surround you with a network of people who are closing deals every single week. So if you're tired of waiting and you're ready to finally get your first deal, click the link in the show notes and schedule a call with me. Let's map out your strategy and get you moving before another year slips by.